I mean, so one of these tweets that I'm going to show you is just insane. Um, just give me a second here. Just setting these tweets up, and we'll be good to go. Um, man, all I can say is, man, it's only getting funnier. And one thing I'm doing, and one thing I advise people to do is always look at both sides of whoever is lying, because they both sides lie. Doesn't matter, Trump or not, Harris, whatever, Biden, whatever. It's all the same crap. So, number one story: Mark Zuckerberg just admitted three things by sending a letter directly to the House Judiciary. And let's just okay. We can look at the summary tweet right here. Biden Harris admin. I can't read today. Biden Harris admin pressured, quote unquote, pressured Facebook to censor Americans. Number two, Facebook censored Americans. And number three, Facebook throttled the Hunter Biden Labs top story back. Now, we all know nothing's going to happen right now. Uh, so all we can do is sit back and watch to see what happens over the next 70 to 60 days, because that's pretty much how it's going to have to play out. And if you guys are out, there's going to be another story to share. Um, I advise you guys read this letter. I've read it already. It's pretty. I should read the last paragraph at least. Apart from content moderation, which is where he had previously admitted to censoring in previous paragraphs, just want to show you guys here. In 2021, the White House repeatedly pressured our teams for months to censor certain COVID-19 content, from the truth to satire. And this is pretty much the crux of everything that we all know, right, happened during that period of time. And then, of course, for those that were aware of the Russian collusion nonsense, they tried to piggyback the Hunter laptop Biden story as if it was part of that disinformation campaign by the so-called Russians, when that story was ultimately discovered to be blatantly false as well. And again, it's just important to understand that it's not about picking sides. It's about having clear evidence of the lies and keeping track of the lies, because that's the key. So, apart from content moderation, I want to address the contributions I made during the last presidential cycle to support electoral infrastructure, i.e., the cheating. The idea here was to make sure local election jurisdictions across the country had the resources they needed to help people vote safely during a quote unquote global pandemic, quotes in mind. I made these contributions through the Chan Zuckerberg Initiative. They were designed to be nonpartisan, spread across the urban, rural, and suburban communities, because he got it like that. Still, despite the analyses I've seen showing otherwise, I know that some people believe this work benefited one party over the other. My goal is to be neutral and not play a role one way or the other, or to even appear to be playing a role. So I don't plan on making a similar contribution this cycle. Now, that begs the question, well, what do you plan to do this cycle then? Because you shouldn't be playing any role, just like nobody else should be playing any role unless they're actually actively running a freaking campaign. Right? And this is, of course, assuming all this shit was real, which we know it's not. But it's fun to talk like it is. So we'll just keep it moving. This is a real thing. Under Germany's Section 188, something or another, Defamation protection for politicians, calling this hefty thing here, I guess that's her name, Ricarda Lang. If that doesn't sound like a fat name, I don't know what does. Could land you in prison for up to 5 years in Deutschland. Now that's fucking crazy. Yeah. Now let's take a view, a gaze at this fine specimen, this fine whale specimen. And this isn't the type of whales that whales only goes for, by the way. Just gonna have to give y'all a heads up on that. No, thank you. We don't do the oversized heads. I mean, look at this noggin. Jesus Christ, man. Poor thing. She definitely is eating herself to death. It's crazy. Oh, there's the evidence. Well, hope you guys enjoyed that one. That was a good laugh. All right. Now, I just want to harp on this because it's just ridiculous that we're even here. All right, let's see. Tokenized account numbers are a serious threat to open banking. Now, if you don't know what open banking is, well, let me inform you. Open banking is essentially Stripe and all those similar services. I don't know what the names of the other ones are. Plaid, uh, stuff like that. In financial services, open banking allows for financial data to be shared between banks and third-party service providers. So those are the payment processors, Stripe, Plaid that I was just talking about, Square, uh, through the use of application programming interfaces, APIs. Traditional banks have kept customer financial data within their own closed systems, traditionally. So here are the here's how open banking impacts the different players in the financial ecosystem so you can have an idea of who exactly is supposed to be quote unquote hurt by wallet addresses. Financial service providers. Open banking encourages innovation among banks and third-party service providers, leading to more choices for consumers, which we all know is a lie. Because when you look at PayPal and the rest, Stripe, Plaid, etc., what happens? Well, they'll keep your money for months and not even engage with you by providing any basic customer service. So you actually receive worse service and therefore actually have less choices. Businesses, open banking data help businesses understand their customers' needs, aka spying on you. Consumers, open banking gives consumers more control, and I just highlighted how that's a lie. So, the point of this is for people to understand that crypto is a problem because that is what a tokenized account number is. And if you're old enough to be over the age of 35 right now, and you were not a moron in 2008 and you understood what this was, then you would understand that there is nothing on the books that is relevant to anything that they're saying in regards to crypto. Because crypto was not a thing whatsoever at that point in time. And that's important to understand, folks. Because again, what's the goal? The goal is to trick you into submitting. However, they got problems because this is just picking up steam. De-dollarization and multipolarity plans top agenda for October Brics summit. All right, so let's go to the highlights. The Hindu Business Line cited an unnamed official to report on Monday that October's BRIC summit in Russia's Kazan might see a non-binding agreement on de-dollarizing trade between member states. They also claim that the much ballyhooed BRICS currency, in quotes, will be notional and have its value derived from a basket of currencies. What follows are their sources' exact words, which will then be analyzed in order to place them in a context and assess the viability of these report proposals. Now, the crux of what's being said here is nobody wants to create another US dollar. And I want to just highlight that, emphasize that, let people understand that, because you can fool me once, but if you fool me twice, shame on me, right? So I think that what's happening right now is that the BRICS are like, yo, we're going to do this, but we're only going to do this under certain conditions. And by we, pretty much mean anybody outside of China. Because China, Brazil, right, the big economies, they're the quarterbacks. But China has the most economic power, right? So New Delhi is examining an appropriate response based on the extent to which it would benefit economically and diplomatically from the proposals without increasing its vulnerabilities vis-a-vis China. Right? So I gave you guys the shortcut version of it already. It is each according to its comfort level within BRICS. Hold on, guys. Jesus. All right, sorry about that, guys. So let me continue. It is each according to its comfort level within BRICS. If you agree for currency settlement, you may choose not to with X country while doing with others. So this is pretty much the line stating that they want to sustain their autonomy, even though they're entering into an economic agreement. So if they're able, and by they I mean the BRICS, are able to come to some agreement where they're just literally using a basket of currencies, which is what the goal is. Well, I guess let me finish reading this. If India chooses not to do, if India chooses not to do with China and yuan or rupee, it is okay. But it may do with other countries, for instance, the ruble or the rand, Russia or South Africa. For instance, Russia can ship out the surplus rupee that is collected in its Vostro accounts in India, convert it into Brazilian real to pay for some transaction, or convert it into South African rand and make payments to South Africa. So the whole idea and the whole point is that their goal seems to be, for now, for there to not be an economic foundation that's tied to a country. Hold on, guys. Sorry. All right. So that's the goal. It seems to be as of now. And if they are able to achieve that, I don't know, man. That really is going to alter the economic landscape in an interesting way. And this is, of course, assuming Utopia isn't behind it all. Because they went to China first, way back in the day. Way back in the day. And you got to understand that a group of people like China, they don't become CCP and all that without some guidance. Because how do you go from living for thousands of years a certain way to them one day all of a sudden it's like, nah, we're doing this? Got to be a little smarter than that, right? So, yeah, things to think about. Democrats sue Georgia election board to block voter integrity measures. This is a real thing right here. This is actually what they're doing. And I'm going to show you, read the part where they show that. Let's see here. Here we go. Filed on Monday, the lawsuit seeks to challenge a new rule approved weeks earlier that gives local officials more power to investigate votes after election day, authorizing any member on a county board of election to quote, to examine all election related documentation created during the conduct of elections prior to certification of results, end quote. It's a mouthful. So the idea is that, assuming this is things people are interested in, I know this is a farce, but whatever. Uh, you go vote, and the voting happens. A law has recently been passed in Georgia to where the board members of the voting board can go and look at any of that data that came into existence as a result of the voting process. They can expect that data, scrutinize that data, make any claims in relation to that data because it's their property anyway, right? But guess what? Your favorite communists are trying to block those type of measures. Conference Board Economic Data Today signals weakest labor market since Rona lockdowns. Quite something. After 8 of the last 9 months seeing consumer confidence revised lower, July's Confidence Board data was revised significantly higher. Now, this is just sentiment check, so to a certain extent. And all the red is just the inflation impacting consumers. And this is just a mere change, right? So when you add all the red up, it's going to obviously be greater than the green. So we're doing very bad. So the headline print, what is that? The headline print is what you see when the number is released. And that's always the number that's manipulated and not believable, which is why I rarely, if ever, talk about economic data outside of explaining to you what it is, because it serves no function otherwise. It's pointless. So, yeah. But the importance of this is to see what they are exposing themselves to the market, right? Because that's how you're able to get ahead and see through the lies and position yourself for a move ahead of the rest. Now, check this out. U.S. home prices surged to new record high in June. So this is just for the Case-Shiller index, I think, or is it the S&P? Yep, the S&P CoreLogic Case-Shiller index. So this is a composite of 20 cities, the 20 largest cities, and guess what? Guess who runs those cities? The Democrats. So yeah, all the inflation going on in America is primarily going on in those 20 cities. So not a surprise. And we already talked about this in the study letter to Congress. Zuck admits Biden Harris admin pressured Facebook to censor content, which we already knew at the time. So it's not really much of a surprise to those of us that are not from under a rock. We all knew back then. And the interesting thing to note is that, Facebook is not the only entity. We all know Twitter was doing it. YouTube is still doing it to this day. So, the media, never mind the media. There is no media anymore. All the media that exists is social media. I mean, you got people, I don't know if you guys know, you got people all over the world analyzing US media now and how they lie to the US population. It's crazy. I had no idea. I just randomly came across some YouTube videos recently. Apparently, that's a thing internationally now. And you still have people in this country that buy into it. It's incredible. California. I don't know if you guys heard about this, but California votes to approve 150,000 in taxpayer-funded home loans for undocumented persons, illegal aliens, i.e., persons that don't even have papers here. You go. Let me try. Let me know how quickly you can get 150,000 for free. Let me know, because these are going to be free. They calling them loans, but they are never going to have to pay that back. This is funny. I hadn't seen this. I don't know if you guys know anything about this, but this is just like a joke at this point. It's been a joke for years, but they're just trying to find ways to not have an election, a federal one. So, as you guys know, a long time ago, I said it wasn't going to be a federal election. And what's interesting is so far I've been wrong because it looks like there's going to be one as of this moment as I'm speaking. However, there wasn't a Democratic one. I did not expect that. Right? So I completely missed that. Completely missed that. But everything is falling apart for the Democrats. I mean, they don't have the black support. They don't have a lot of the things that they act like they have. And that's something that is important to be aware of with respect to the market because whatever happens to the dollar, as we've talked about many, many times, is a driver for everything in the market. So it's important to see what is actually happening. So, all right, right now we're going to start out with the VIX, and the VIX is selling off. It's been selling off since this morning. As you guys see here with my crosshairs at, it's 9:40 a.m. this morning, Eastern Standard. And let's just go down to a hourly. Well, actually, let's do 13-minute per candle just to get a look at today's price action. Uh, the market open is here. The VIX opens at 3 in the morning. For those that don't know, not sure why, but that's how that works. And into the morning session, volatility was actually bid, and then it dumped 10 minutes after the open. And that essentially precluded what ended up becoming a rebound type of day once we look at what the actually let's look at this tab. Once we look at what the Nasdaq did, and we'll look at the S&P, and we'll also take a look at gold as well. But let's just start with today's price action and and how they played in today's levels. So not a shocker. 940 is right here, 945. And as volatility peaked, the market bottomed. And the level was there. And tomorrow's levels will be there as soon as I feel like doing them. But as you guys note, can see on the chart, the market peaked at yesterday's level. But what's interesting is that it was a lower level, right? So this just highlights how weak the market was at a certain point in time. It potentially is still weak because this is essentially an inside day to a certain extent. But it looks like it's setting up for a bull move because this level here is actually a support level. And you can see that when you zoom out to 233 uh, ticks per bar. And what do we have here? A long-term moving average, right? And then once you get rid of some of the stuff on this chart here, let me get rid of this. And let me get rid of this, just so it's a little cleaner looking. And let me get rid of that. All right. Now, we talked about support and resistance before. This area happens to be right near 19,500, which is actually a very important level with respect to options activity, just how the players are positioned in options. And that's why these lines are here: 19,500, 19,000, 18,500. Now, those are the levels where there is big put positioning and open interest in options. And it's pretty consistent because this is where the market has been trading around here, up here for a long time. Um, so when we zoom out and we look at this top of this range coming all the way back here, it just so happens to coincide with one, two, three levels, in addition to this area being resistance at one point, then becoming support, which also happened to be a level, right? So just taking into account all these basics, that was a pretty significant area. And the market let us know by bouncing there and never coming back down here throughout the rest of the session. So when we zoom back in, let me see something. Yeah. When we zoom back in and we take a look at the profile for today's price action, I want to highlight the fact that we reached this area, sold off, and then the market went bid. So this P profile that you're seeing right here is a bullish profile, meaning there should be price support, buyers stepping in below this level. Now, interestingly enough, we're opening the session at yesterday's settlement area. So it's almost like we didn't do anything at all yesterday because the market closed higher, but it opened and it dumped right into that area once again. So off of today's open, it looks relatively weak, right? But that doesn't mean it's going to stay that way. And that's the interesting thing about markets, is that they like to set up traps. And it's very, very important that if you're going to play markets, you are always looking at both sides of the coin. And let's take a look at a longer term picture view of what's going on just based on the moving averages. Let's get rid of this here. Let's hide the price. And actually, let me see if I can turn off. Is it shutting it off? Nope. There you go. All right, so let's just take a look at the moving averages and let's ignore everything else. Um, I think we can leave. Yeah, we can leave that up there. All right. So the long-term moving averages right now are above price. So by that structure, the market is bearish, right? So if we zoom out a little bit more, what do we get? We get that price is above the long-term moving averages. So that's bullish, right? So we have conflicting time frames, or conflicting range zones in price action, right? So if you look further out, price action is going to be bullish, right? Because logically speaking, further out you go, the more in line with the bigger trend that image is going to be. And that's why we see that when we zoom out, still bullish. But the question is this the start of a potential bear trend, right? Will 19,650 continue to be resistance? 19,700, right? When we bring the prices back into play, 19,650, 700 is a pretty important area, right? In fact, when we zoom in right here, what we have is a major gap between yesterday's first and second levels. I mean, price just fell like a rock between those levels. It didn't even register any little activity was registered here. So this area is definitely going to be an area of contention for the market if it intends to move higher in line with the bigger trend, which, given the profile, seems to be the highest probability scenario. However, if the market operators are very serious about keeping price below this area, well, they'll be there waiting. All right, and if we look at E-mini S&P 500, it's going to probably be a similar picture. Come on. All right, so E-mini S&P 500. Actually, let me go to the bigger one. A little more constrained price action than the Nasdaq, which is just a function of what are the components of the index and how it moves. Right, it takes a lot more to move 500 stocks than it does to move 100 stocks, and that's basically the main difference between the Nasdaq's price action and S&P 500s. So looking again, we nailed the level to buy on this morning. Right, the market low was 5.61150. We got 5.61175, and we really couldn't get above yesterday's settlement. Right, but it's important to note that we probably have a similar market profile structure to Nasdaq, such that we traded up, sold down, and then got bid off this first level, and then we saw nothing but buying activity, right, throughout the rest of the day. However, in today's open, market sold off. Right, it sold off. Still hasn't hit any areas of significant support, in my opinion, just yet. But we are within yesterday's or today's value area still, which is these two black dotted lines that you're looking at on the chart, 5, 6. Oh, this should be marked actually. Give me a second. Yeah, 5, 6, 3, 7 spot quarter is the lower end, which is in line with the market low so far of 56.33. So 56.37 is a value area low for yesterday's trading session, and we only got a 4-point slip from that level. Now the value area high for yesterday is why isn't that showing here? I guess it's blocked. It's probably 5, 6, 4, 8, 56.48.75 is probably what it is, because it's being blocked right here. But anyways, we have to get up here, all the way up here. Well, actually, we got to first get through 56.43, and then hopefully, if the market is going to maintain any bullish stance, it would have to break 56.50. Long story short. Now, looking at the moving averages, it's sloping up, and we just got to cross between the short-term moving averages, which are these, the orange and black, over the blue and brown moving averages, which are the long-term moving averages. So if you have a cross there, right, you can expect some positive momentum from price. But it doesn't always work out that way, right? And that's important to know. So S&P 500 tomorrow. Let's take a look at the daily of both S&P and the Nasdaq. All right, so here we go. We are still playing around with this area of resistance at 680. and we're looking at the NASDAQ right now. You guys can see anytime we come close into that area, big sellers step in. Big money steps in and sells it down. Here's 19,694 and a quarter is the high for the day. And the market just got sold at those levels. So that's the area of contention specifically. That 681, 680, 17, or that 680 slash 7,000 area. And it plays in the part into this here. And we already saw in the zoom in of what happened a couple days prior and why that level is significant. But in the meantime, right, what we're looking at here is, man, why this shit is not working out like I wanted to. 19,581, which is the yellow moving average, right? Price keeps finagling around that 600 level, right? Today's low was 441, and we already went through how that area found support. Turns out that after the bull move and break of VWAP earlier in the month, after the bounce of August 5th, excuse me, um, broke VWAP on the 15th of August, and the market essentially hit that 681 spot 50 area and then proceeded to roll through it or push through it and then roll over. So what we're doing right now, in my opinion, is testing VWAP again, testing these moving averages, testing market structure to then continue on higher. That's what I think we're doing. If we look at the cumulative delta, yesterday we were down here, and I wasn't really convinced about us going lower because of how it was structured, and look at where we're at today, right? We're above it again. So momentum seems to still be with the market moving higher. Um, Even the volatility reads are not extreme. They're just kind of in a lull zone. And that's how markets trend. That's how they trend. And if you look here, the market just rolled higher for a greater part of the year, first quarter, before anything significant happened. And then we saw an increase in volatility, which is what down means in this lower indicator. Um, and if we look at the E-mini S&P, it's going to pretty much be the same picture. Slight differential based on weights and whatnot. But in my opinion, this market looks even more bullish. When you zoom in, there's not a lot of things holding it in place as far as it going lower. So if the market is going to sustain this daily momentum, all this has to do is just float up here, and that's what we've seen before, right? And price market structure is bullish, right? Volume is bullish, volatility looks bullish. So all these things are lining up for probably a weaker dollar. Let's take a look at what that looks like today. And then we'll take a look at the commodities and keep it moving. Yeah, dollar just keeps selling off. Important to note that we are seemingly entering a divergent area, positive divergence, but momentum is still weak. We might be reaching an extreme down here, but I don't know if it looks like it's still gonna drop like a rock some more. Regardless, that's what it looks like. Yeah. I mean, it'll really be dependent on if people start short covering and stuff, but the dollar just doesn't look good. It doesn't have any policy support, which is what it really needs in order to get back up. But don't think that's the goal, because people are well aware that cuts are en route, and cuts are not going to keep people in the dollar. So, and then on top of that, you have the serious de-dollarization going on, economically speaking, globally, right? Every country is trying to get out of the dollar. Um, and that's pretty much how that cookie crumbles. So here we have crude. Still has bullish structure. Interestingly enough, I had a down day today after running up into VWAP. So it's probably the first test along with that moving average. If you guys can see, let me zoom in. Got close to VWAP, 77.89. Didn't quite get there. Topped out at 77.60, which coincided with this moving average on a daily basis, which is a long-term moving average. And ultimately just rolled over, right? But it seems like the market is going to pick a structure such that it reaches the other side of this range. Right now, whether the market actually picks a bullish stance or not thereafter is hard to state because there's just a lot of factors at play when it comes to crude and why it's trading how it's trading right now. Um, in all honesty, people are lucky it's not higher because it should definitely be. So, yeah. I mean, when you look at gasoline and heating oil, like those markets are, yeah, they're on their legs or on their knees. You look at the V contract, just for October, it could potentially be bottoming out, but I'm not buying it because when you look at the whole market, it just looks weak, right? And when you look at the futures forwards curve, guess what? It's pointing downward in the future, even though you have some cyclicality in the curve. It's still pointing downward. So it's just not a lot of things that are lining up to show and prove that commodities, at least for now, are really ready to run, which is what makes watching crude important because is typically a bellwether. Back in 2008, that thing took off to 150 before commodities really started moving. So things to keep in mind. Cotton still trading around down here, trying to find its footing. I think seems like it's not going to trade below its short-term moving average, the yellow line. But we keep watching because technically it's still bearish. All right, so we got dollar, E-mini, S&P, NASDAQ. We just got to look at gold and bonds. And here we are with the bonds. Bonds holding up as expected. Now, it's important to watch momentum and how this can change, right? Because it looks like it's flattening out right here. And when we zoom in a little bit, you got lower momentum on not necessarily higher prices, but on a move higher, right? You got a higher high versus a lower high on either side. So just things to be aware of because the market could roll over from something like that. It could roll over in case you're leaning long in terms of rates because now it's obvious, right, that the market is going to get cut. But we all know why, right? They're 6 to 8 cuts behind, so not really a big secret. And it should really be a layup trade if you can pick a good spot to get up in there, understanding your risk. So VIX again, the VIX, just to highlight this before we sign off, the VIX is like a slinky. A lot of these things that track changes and rates of change, those things are like slinkies in the sense that they stack, right? Once a trend starts, that trend typically continues. And this is really the case when the markets are trending up versus spiking down, right? Because you see, the market is trending down here. Here is spiked down. So you get essentially a one-to-one force, right? I mean, I don't know if anybody here took any college physics, but three, basic Newton laws, right? The first one is for every action, there is an equal and opposite reaction. And this is essentially what you're seeing here on this chart when it comes to rates of changes in market prices. Volatility spikes up and it comes back down. But the important thing to grasp from looking at this is the bottom half of the chart that you're looking at right now. That's its normal state. So that's the resting state, right? If you've ever heard the term resting bitch face, well, resting low vol state, meaning that the normal stance of the market is a low volatility stance, such that volatility is below 14.5 on average, 14.5% on average. When it's trading below that level, hold on, guys, because the world is ending apparently. All right, I think I'm safe to talk. So once we enter that 15, that sub 15, sub 14 range, the market really gets on his gimme, right? And just to show this, let's tell the SPX on this thing to wrap it up and roll out. Okay, so what are we seeing here? We want to look at we want to look at the S&P when it's above a previous point of resistance and see what the market is actually doing, right? So oh, I know what's going on here. Hold on, guys. White chart, black chart. I know I'm a mess. All right, coordinate, whatever. All right. So as you guys can see here, SPX is trending higher, right? So let's see where we are once the SPX starts trending higher as far as volatility goes. Right, let's get a vertical line going here. Um, Bam, right here. And if you guys got any questions, please throw them in the screen or in the chat. All right. So this was what, 4th of July or June, excuse me, when the market starts trending higher. What seems to be the average for the VIX during that time? 12.6. And I just put it in the middle of whatever I think this main zone is. And it seems to be 12 and 13, 14. So maybe a little higher, 12 and 3/4 or so, but that's good enough, right? So let's go back and let's do another cross section just to see. Right here. Yep. Right. And I'm gonna put the cross right here, or the horizontal line on price action right here. And now we're highlighting January 24th. Okay. And where is the VIX during this time? Well, it seems like it's a little higher in terms of its mid range or whatever the average VIX reading is during this time. I'm trying to move it around a little bit. Seems like it's 13 and 3/4 during this time. So 13.75, because the range is much higher. There's a lot more volatility in the first quarter of the year this year because of all of the carryover negativity from the previous year. But the market just zoomed on up in the face of that. It didn't really get detracted or slowed down by that at all. And then the lower end of that range is the mid range of that further area of volatility that we studied a moment ago at 12.6. And the upper end of that range during this time went all the way as high as almost 18. Let's see, 17.94, almost reached 18 during this time. But even yet and still, let's figure out how big these moves were until they stopped due to volatility picking up. Let's see. That looks like a good spot there. And here should be the 11th. We already know that. Around there. All right. So we got 48%, 49 almost versus 72, which is interesting because you would think with a lower VIX reading, you would get a bigger move, but it seems like you want a little touch of volatility with your SPX PAMP, thanks to the Fed. So, all right, that's what we got for today, guys. Keep your eyes on VIX if you're watching the market. When it comes to crypto, All I can tell you guys is just hope them fools keep selling, because that's all we can do is keep positioning ourselves for that big win that's coming. Because if the dollar does collapse and they do go to CBDCs, which you guys already have been made aware, is just the dollar as you know it in crypto, which is just USDC, USDT, and so on. Any coin that portends to be fiat uh but has keys, right? That's not a real cryptocurrency. So be cognizant of that as always. And you guys be easy. Peace.